Hello and welcome to This Is Not Just Ross and Chris. Today we are continuing to talk about all things property and property investment around tenanted sales particularly. So it's not just Ross and Chris because today we are joined by mortgage advisor ace Lynsey McMenemy. And
Hi.
Lynsey, from my experience, is a great person to refer business to because whenever I do so, she always reacts immediately. So for me, that's what I want to see. You know, you're clearly customer focused, and prompt at responding to customers, clients' inquiries and such like. What I don't know is how much you know about mortgages, which I'm sure is a lot, and we're all going to find out about that shortly. So as usual, we don't have a lot of questions prepared for you, but a bit of a chat beforehand about some of the aspects of lending just now and interest rates, and everyone that's watching and listening to this just now will have some idea of what's happening. You know, Bank of England interest rates going up, and it's I don't want to say challenging times, but it'd be interesting to understand a bit more in detail about what actually is happening, what opportunities are out there, and how we can help landlords and property investors out there just now.
Yes.
What are your thoughts, Lynsey?
So yes, it has been more challenging than previous years, but the market is still very busy and there is a lot of opportunity out there just now, certainly for a lot of investors. They're getting very good properties in very good areas because there's slightly less competition. So, you know, instead of having to possibly pay 20-25% above home report, they're getting that at a much better price. In terms of interest rates, we've had welcome news today. So one of the lenders has sent an email to say they will be reducing rates, which is welcomed. So just to explain to everybody, there's almost two elements of it with regards to the increases. The first being that the Bank of England are trying to curb inflation. So they're raising the base rate, and they're doing that quite slowly. So I feel like it may take slightly longer to improve, but we're almost, I hope, at the peak where things should start coming back down. But equally, what's happened over the last 2 to 3 months is the lenders actually borrow the money that they lend for lending. So they borrow amongst themselves, and that is called a swap rate. So the swap rates have gone up fairly quickly over the last couple of months, and that is the reason why the interest rates are slightly higher. Now, we get access to swap rate data, and that is starting to settle, and this is welcome news. As soon as that rate settles, a lot of the lenders will start to reduce the rates. And this is just the pattern that happened in October when Liz Truss did the mini budget, and the swap rates went up, the pound dropped, and all the rates shot up fairly quickly. But they'd actually come back down quite dramatically a couple of months later. But sometimes the media doesn't report that. They report the interest rates going up and up. So I always encourage clients, if you're making a decision, to always speak to a broker to see what the actual rates are, the pattern, and why it's happening. And just lastly to mention as well, if we do select a rate for a client and say the completion date is 3 months away, we can manage that. And if that lender reduces the rate, we can most likely select that product to get them a cheaper rate. So I have been doing a lot of that recently.
Okay. Pretty much got that. I didn't know too much about the swap rate. That's really interesting.
Yeah, no, it is, and it's something that they don't report. So the Bank of England, every time they've put up the base rate, some fixed rates haven't actually changed. It is the tracker deals that immediately impacted, but the fixed rates, on occasion, they've just not moved when the Bank of England have put the rates up, but it's the swap rate. And that's why we see a lot of activity very quickly, because they come out the market, they readjust their products, and they go back out to market. But again, the media will report that, you know, lenders have come out in the market, but in reality, that happens all the time because they adjust products. So one lender's at the top, they get lots of business, they become very busy, then they just come out for a couple of days to catch up and come back into the market. So that is the trend, and that is how, when we use our sourcing system, one lender's at the top one day, another lender's at the top the next day.
Cool.
I was going to come in with a question, so I'll ask my question first. And I suppose the question about how long mortgage offers are approved for. Historically, it was always, was it 3 months a mortgage offer would be available to someone signed a 6 months?
Yeah.
And is that changed, or is there been situations where you've thought a client has a mortgage agreement in principle, but suddenly been taken away with them because of the crazy mortgage rates and the things that have happened over the last, well, since really October, so you touched on there. Because we have certain clients that have come to us with offers, and suddenly that suddenly significantly changed over the space of a week when they thought they had a mortgage agreement in principle. Have you experienced that with some of your clients?
So there's actually only 1 or 2 lenders that you can secure a product at agreement in principle stage. So you don't actually select the product. So for example, if we have a lender today that puts out a product, typically that product will be available anywhere from 3 days to 3 weeks. So it's just unfortunate timing that if they've done their figures based on a particular product at agreement in principle stage, once they've had their offer accepted on the property is when the application goes in. But as soon as the application goes in, that product is then secured for the client. So it would just be unfortunate timing if that product was taken away in the interim between the agreement in principle and the mortgage application being fully submitted. And that would be the only occasion that would happen. Now, the majority of lenders, the mortgage offer is valid for the 6 months, but there are some lenders who have particular products that have end dates. So it's really important if you're the broker would know, but if you're doing your mortgage yourself, it's really important to know that, because some lenders, that product may finish in a 3-month time. And there's only about 5 or 6 lenders that do product dates rather than the 6 months.
Yeah. The other query I had was about, remember COVID? Remember a few years ago, there was COVID was kicking about, yeah. And
yes.
It seems like such a lifetime ago now. And during COVID, tenants would obviously have issues with maybe paying the rent, and then that would obviously have a knock-on effect to landlords paying the mortgage. And then mortgage companies allowed these mortgage holidays during the times on unusual circumstances. And there's a lot of chat at the time about how if you took a mortgage holiday, how it would have a sort of knock-on effect potentially to lending, and at some point in the future it'd have a knock-on effect to people willing to lend to you, because this would stick on your credit rating somewhere. How is that impacted now? What we are 3 years after COVID. How has that impacted some of the clients you've got securing new products now?
I think it was more in the time of 3 years ago. If you'd taken the payment holiday, it would be noted on some credit files. Not all lenders used to do that, but some used to. So if you had taken 3 months payment holiday and then your mortgage was up for renewal 3 months later, it would just be noted. It wouldn't be classed as a missed or late payment or default or anything like that, but it would be noted. However, because we're now 3 years in, there's no impact, thankfully, for people, unless they have missed a payment or not paid a mortgage payment. But if you've had the agreement, it shouldn't impact any clients now.
Just for the record, that I took a mortgage holiday during COVID, and actually I think there was a little bit of mortgage holiday shame that went with that. I don't know if anybody else, there's like, oh, you took a mortgage holiday. Oh, okay, that was big. Why did you do that? You shouldn't have done that. Oh, you're in trouble now.
No,
I did, and since then, I've had new mortgage products and renewed mortgage products, and not been any problems. So yeah, just to back up what you said. And
it was advertised as well. So it was this is available to people if you need to use it, because we need to remember during COVID, we had no idea what was going to happen, you know. Initially, we thought everything would slow down, and it went the opposite way and just went straight up with.
Yeah. I remember that. Oh, you know, the people that I'm not going to buy right now because there's going to be a crash and all the rest of it. And the opposite happened.
It just went like this for months and months after. But yeah, it was advertised to help people out, just because, again, we were looking at all aspects of how we can help people with this new virus that had come out and taken time off work and things.
A fun bit of nostalgic review there, wasn't it, about COVID?
It was done for the right reasons. Landlords were helping tenants, and you know, they were working together. So it's good that there has been no long-term impact over taking a mortgage holiday during those times. Yeah, no, absolutely. So I suppose go for it, Chris.
No, I was just going to start going on a little bit. It's just like, oh, wait a minute. Yeah, we downgraded our Zoom membership.
We've got 10 minutes remaining, so we'll make it quick.
Well, yeah, it's a bit of a bugbear of mine, this whole standard construction, non-standard construction. They won't lend on non-standard construction. And I mentioned it last night in a sort of a meeting / game of golf that I had. And what was seemed to be said was that in Edinburgh and in certain other locations, it hasn't, you know, it being a non-standard construction style flat hasn't really affected sort of property values and stuff. But in certain other locations where there's been non-standard construction, there has been a decline in property values over a period of time, or a sort of a general decline in the quality of the area, potentially. I'm not sure. But what is your thought on this, you know, lenders being so adverse to lending on non-standard construction?
So here's the thing, and this is why I have a job, I think, but not all lenders lend on everything, right? So there's huge amounts of choice, and some are very good with self-employed, for example. Some are very good if, you know, the landlord is only running a limited company and they've got minimal funds available, and it's just about finding the right lender. So there are lenders out there that are okay with non-standard construction. Will every lender do it? No, but the majority will. So it's just about us matching the criteria of the client and the property with the right lender. So, you know, we have the tools. We have lots of great BDMs that we call and say, can you just have a look at this property, yes or no type thing. So I've never really not placed anything because it's not been non-standard construction. It's just finding the right lender that is happy to lend on that.
In buy-to-let as well as residential.
So that's the buy-to-let, but across the board, it's just about finding the right lender. Yeah.
Well, that's encouraging. Yeah, got a couple of issues that we could do with some help with. So.
I'll have a look for you, Chris.
Okay, Ross, sorry, mate. What were you going to say?
No, just a question over limited companies. You still find that most people come to you, Lynsey, with as a limited company, they're wanting lending on a limited company as opposed to individual landlords looking for lending in their own name?
Yes, interestingly enough, there was a huge gap a couple of years ago between buy-to-let and limited company rates, but they're actually quite similar just now. We always recommend that a landlord speak to a tax advisor. However, given the tax implications, more often or not, it's more beneficial in a limited company. So I always give them an indication of personal name versus limited company from a lending perspective, and then we recommend having a chat with an accountant / tax advisor to see what is going to be most beneficial tax wise. And again, it depends on the landlord's overall strategy. They may just want one property for pension, or they may want 3, 4, 5, and again, your advice changes depending on what the landlord's overall strategy is for how many properties they're looking to own.
Yeah, it's interesting. And I suppose with the rates being I think rates are at a 12-year high, aren't they, for buy-to-let rates? So there's some people in the buy-to-let sector who I've never experienced rates this high before. And I suppose you alluded to at the start of the chat that things are moving in a positive direction. So no one ended a sort of doom and gloom saying rates are out of control. They seem to be sort of starting to cool down. What does your crystal ball tell you about what's going to happen in the next couple of years?
So I think, I mean, inflation's now 7.9. I think, we're going to have a rocky 6, 8 to 10 months before things start to improve. I do feel that landlords are quite well informed and they know going into this that it's a long-term game. There's always going to be highs and lows with rates. So it's making sure that you've got a really good property and a good area, that you've got good tenants in, and you'll get really good capital growth as well. And that's the way that the landlords always go into this, that it's a long term, not buying a property to sell in a year's time, So landlords are quite well informed, but I do think that we are hopefully almost at the point of things coming back down. I don't think we're going to see the rates at where they were at COVID again. If I can predict, I think things will settle around the 3.5 base rate, and that will be the new normal. But again, who knows? I must say we're not given any information that the general public is not. So that is just my opinion on where things are going to be and going to settle.
That sounds quite positive, though. Yeah, I mean, 3.5% just sounds awesome. Yeah, but we'll have to wait and see. Again, last night there was some talk about following on. We've only got about 4 minutes left. Following on from Ross's question about people buying in limited businesses, I did hear something about if you've got it in a personal name, and obviously that's causing you a problem tax-wise, you can move it to a sort of a partnership, an LLP or something like that, and then move it over to a limited business. Apparently, it's quite a good way of moving it over without having to pay loads of ADS or LBTT. But I was just thinking maybe we can get an accountant on next time to answer that question.
Yeah.
The whole thing is really, it's an interesting question.
Yeah, the stamp duty is very complex for the additional ADS, and there isn't many ways to avoid it, to be honest. So I'd be quite surprised if that was the case. Obviously, we know if you're moving 6 or more or buying 6 or more, then you can save on the ADS. But that's why it's very important for clients to decide from the get-go if they're doing personal name or limited company, because changing is, it's not cost effective to change halfway through. It's really important that they make their decision and stick with it at the time to avoid the ADS.
For sure. Okay, well, thanks very much, Lynsey, for your insights. And
You're welcome.
Chat. It's been really nice to see you again, and thanks for the help that you provided to any clients that we've sent your way as well.
Yes, no worries. Yes, lovely to catch up with you both, and thanks very much for inviting me on. It's been nice.
Okay, and hang on for a second, Lynsey, but we'll say bye to everyone else. Okay. Thanks a lot for watching / listening.
Bye.